Good morning. It's the 16th of February 2023, Thursday morning, and we just had core PPI released at 8:30 a.m. I've waited for the news to absorb into the market this morning before jumping on. And S&P 500, we have this range between 4,200 and 4,100. Okay, still holding between there. It's bullish. We haven't had any strong bearish sell-off at all, but this is the range that we're holding in at the moment. Okay, US30 Dow Jones Index, we can see we've got this bullish flag. Price is still bunching up in between here, getting smaller and smaller and smaller in regards to its direction. It's directionless at the moment. It's neutral. Nothing's happening. And that's why we're seeing these wild swings between range and it's going outside of the river, is because we aren't used to, there's no directional push at all. So there's no pullback. It's actually falling between two ranges. So if we go to the 4 hour, start to see what that looks like a little bit clearer. That's the range, demand 33,500 and supply at 34,500. And so it's working that area and it's waterfalling between both instead of pulling back in a direction. Okay, and that's why it's pushing outside of riverband, and we've just got to be a bit vigilant on that at the moment because it's coming back. The trades are coming back. There's no direction. And whether you're buying or selling, if you buy or sell near this demand, if you buy near this demand and you sell near the supply, you're going to make money. So that's why it's so important to be aware of your high time frame and what you're looking at, always. Okay, that's the 4 hour. If we go down to the 1 hour, we can see what happened this morning. Came off supply here, 34,200, and moved down to demand here at 33,600. This demand zone is holding very strong at the moment, and it is. We're just working this range. So unless we see this break beneath this demand zone here, 33,500, this range is holding. There's no direction, and we're just waiting for that direction to come. But use of high time frames is so important because then if we use the high time frame, we know if price is in this area up here, we can sell, and if price is down here, we can buy. Anything between that, I would avoid. 1 hour time frame looking at yesterday. 1 minute time frame looking at yesterday. Okay, I'd love to use this casino edge analogy, right? In relation to how I looked at yesterday, and this was the major supply zone, correct? Here, that's where the orders are. Yesterday at the open, we had some movement. Wasn't too much volatility. But my orders were sitting up here in the supply zone, okay? And if we think about this from the perspective of it being a roulette board, and if you had each corner of the roulette table, there was a square that you knew was a 90% win rate. That's what that square represents. This supply zone coupled with the fact that it's outside of the volatility, outside of the riverbank. That is my 90% win rate zone. That's the zone that I know I'm going to make money in. What's so difficult for people to do is to wait for that. It's just to be patient and just wait for that area, right? Using a limit order, you are bringing price to you. You're waiting for price to come to you. You're in charge of the game. You're not chasing. Okay? So going back to that analogy of the casino, if we know that this area is one of the 90% win rate zones, anything else that we put down, any other bet that we play on that roulette board, for example, has a 40% less chance of winning. Why would you ever put your chips there if you know that they are the odds? And that's what you're seeing here, represented by this table. You're seeing that area here is where we have a 90% win rate. That's where we can beat the house. That's where our casino edge is. That's where we have an edge on the casino. That's where we have an edge on the house. That's where we win. And so we wait for it to get there. If price doesn't get there during the session, well, we don't take a trade. And that's part of that's part of winning, is just to be patient and to wait. Look what happens. As soon as, the session ends, it gets to Asia. At some point during London, it licks into that zone, and then that's the top, and it comes back down to the supply, to demand at the bottom here. Okay? The areas work. It's guaranteed. So my trades were sitting up here. I had limit orders on. Nothing happened. They didn't reach. Okay, I've cultivated this skill of patience. I've cultivated the skill of waiting, because it's actually ridiculous to put the trade anywhere else when you know that the odds are in your favor in this area. Why would I want a 40% chance of winning here when I've got a 90% chance of winning here? Right? It's that simple. If you can conceptualize that and make it look like that, anything else that you're doing doesn't make sense. It doesn't make sense. There's no reason to be doing anything else. It's pure gambling. Okay? Any trade put anywhere else in this region is gambling except for here. This is a 90% win rate. This is where you're going to win. Look how it works. It's that simple. Boom, it goes down. Can you wait is the question. So that was yesterday. Okay? And then we look at today, and what happened? Okay, 8:30 a.m. news. PPI, catalyst, pushes directly out of the median. This is the pattern we're looking for. We don't want to trade mean reversion when it pushes straight out of the median, because it needs to traverse across the river bands like this. It has to make that size move, okay? It needs to make that size move. What does it do? Exactly that size move, the move of the bands, okay? From there, the high to the low is the average. This river represents the volatility, the average volatility of price action on the US30. It's tuned to it. It has to move that far. So it moves that far. What happens? It moves that far, comes down into demand to the left, the next demand zone through here, right? That's the next demand zone. And then the next one underneath that is down here at 33,800, okay? 33,700, right? That's where price goes, all the way down there. If we know our demand zone and we know our daily volatility measure, and we know that we're never ever going to buy at the area directly beneath the median, okay? Yes, we have a demand zone here, but we've got news. We have news pushing, right? We have news pushing out of the median. News pushing out of the median gets to there. It's going to continue further. It's going to go to the next zone. If it came from here, if it moved up at the start, like this, okay, yeah, then you buy that area for sure, because it's already traversed. It's going to go up to the top of that bank, and then it comes down here. That's a guaranteed buy, or you're going to feel more comfortable because it's moved that far. But if it kicks straight out of the median like this, that's when you got to be aware of the fact it's going to continue pushing, and it's the one major pattern we use. It's the one major pattern. Do not trade something that pushes straight out of the median. Now it's coming back up here. We've got a beautiful sell opportunity coming up, right? And where would that sell opportunity be? Well, we've got the next area of supply through here. Okay, you can see that supply through there. That's in line with the riverbank, right? It's pushed down here. We're in somewhat of a downtrend on the 1 hour. We're coming back up. It's going up, down, up, down, up, down, coming back up. That's an area there that we're looking at. The pullback, that's where I'm going to trade, something around here. I'm definitely going to layer in if price gets up here. So what I'm going to do right now is put an alert in. An alert. Okay. We're slightly bearish on the 1 hour. Sorry, on the 1 minute. So my alert is there. Right? I'm going to put it right there actually. And I'm going to wait to see what happens. And I'm going to have my, I'll have limit orders ready to go. I have the luxury of being at my screens. When that goes off for me, if you're not at your screens, put some limit orders in there. It's all good. Drag your stop loss out. You'll be fine. Okay? If for whatever reason it overshoots that area like this, okay, get out at the entry. Scale in a bit, wait for it to come back down, and then close. It will come back down. It has traversed the bottom of the demand zone here, the bottom of the river, and it's heading on the way back up. So this is the kind of action we want to sweep the volatility across the riverbank like this. Okay? Never, ever, ever get in when it's running and dripping away from you. Clarity this morning. Beautiful. Let's get into it. Have a beautiful morning.